Hello, today we're going to talk about something that a lot of people have been asking me, and honestly, this is a topic that I struggled with 7 to 8 years ago when I was just started to be exposed on new launches. So the question is, should you be buying a resale property or a new launch? So in this video, we're going to go through beyond the normal resale and new launch comparison. This isn't just a progressive payment versus normal payment kind of video. We're diving deeper into how resale and new launches prices are really determined, what drives their value, and what you should really consider before making your move. So whether you're buying for own stay or investment, by the end of this video, you have a clearer view on what are the options that suits you better. So before we start, if you like videos like this, real estate content explained simple in an honest way, do help like, share and subscribe. This will definitely help me a lot. Thank you. So here are a few top concerns when choosing between resale and new launches. So number one, your entry price. Am I buying at a fair price or overpaying? Number two, timeline. Do I need a place to move into soon or can I wait a few years for it to be ready? Number three, potential capital appreciation. Will this property actually grow in value over time? Number four, supply and competition. Are there too many similar units in the area that might affect future prices? Number five, exit strategy. If I want to sell later, will there be a strong demand for my unit? So in this video, I'll be focusing on two key concerns, which are your entry price, how you buy in and at what stage and who decides the price. Number two, your exit strategy, how you plan your timeline to sell, rent or hold for growth. To make things easier to understand, let's take a look at a real case study, the Florence Residences, a new launch that's already TOP, and also to study how buyers who entered at different timings face different opportunities and risks. The Florence Residences is located along Hougang Avenue 2 in the Kovan area of District 19. This project sits in one of the most established heartland neighborhoods in Singapore. It's within walking distance to Kovan and Hougang MRT, surrounded by plenty of everyday conveniences, from coffee shops and supermarkets to the ever-popular Heartland Mall. The Florence is a 99-year lease development and it officially TOP in 2023. It has 1,410 units with a strong focus on lifestyle, over 100 facilities. So what's interesting about Florence is that it's launched in 2019, right in the middle of a very competitive market cycle. And since then, prices have evolved quite a bit, which makes it the perfect case study to understand how entry price and timing can shape your overall outcome as a buyer. Florence had a relatively weak start at launch, moving only 54 units out of 200 released during its launch weekend. Back then, Florence wasn't the most popular launch. It went against several strong projects in District 19 like Affinity at Serangoon, Garden Residences, Riverfront Residences and Sengkang Grand Residences. So all targeting a similar buyer pool. With so many choices and overlapping price range in the same region, Florence really struggled to stand out during its launch phase. How did this development perform? So let's take a quick look at how Florence has actually performed since launch and what numbers tells us about entry price and exit strategy. As of October 2025, there have been 344 profitable transactions recorded in this development, a strong indication of healthy post-TOP demand and capital appreciation. Among these, the highest profit achieved was about 728,000, and the top performing group of sellers generally saw profits ranging from 500,000 to 700,000. Majority are the 3, 4 and 5 bedders. So across the board, profits range from as low as 14,000 to as high as 728,000. What this really shows is that even a project that started off quietly can deliver strong results if the fundamentals are sound and entry price is right. Larger units, especially the 4 bedrooms, showed the strongest capital appreciation both in per square feet and total returns, while smaller units delivered steady but moderate gains. So those who entered early and held true to completion clearly reaped the rewards. While many buyers profited at the Florence Residences, it's important to remember that not every new launch purchase ends up in the green. Here we can see a few cases where units sold at a loss between $1,000 to $79,000 even after holding around for 2 to 4 years. These were mainly 1 and 2 bedroom units purchased later in the cycle from 2021 and 2022 when prices had already climbed close to $1,800 to $2,000 per square feet. So by the time these owners exited in 2024 and 2025, the resale market had softened slightly and their entry prices left little room to upside. This clearly shows that not every new launch guarantees profit. Entering too late or exiting too soon can easily turn potential gains into losses. So timing your entry price, understanding your holding period, and aligning with market conditions make all the difference. So anyway, if at this point you're feeling a bit zoned out and you say, hey Zacson, can you just skip the numbers and just tell me how can I make my purchase safe? Feel free to skip this video, but most importantly, contact me through my WhatsApp. Anyway, just kidding, I don't skip this video. I spend a lot of time to dig these numbers for you, so make sure to watch through. But really, if you really want a tailored breakdown for your own purchase, feel free to WhatsApp me. Now that we've covered the performance and the profits, let's take a step back and look at the bigger picture, how prices for the Florence Residences have actually moved over time. From the day it launched back in 2019 all the way to current resale market in 2025, the project has gone through two very distinct phases. The first, during the developer sales period when units were still under construction, and the second, after TOP when it transitioned fully into a resale market. Let's break this chart down into those two parts and see how prices shifted, first during the developer sales phase and then later into the resale phase. Part 1. Developer sales phase between 2019 to 2022. When Florence first launched in Q1 2019, the average price was about 1437 per square feet. At the time, it was competing directly with several District 19 projects, so initial sales were slow and prices stayed relatively stable for the first year. As construction progressed and confidence built, prices steadily climbed to about 1779 per square feet by Q3 2022. That's an increase of $342 per square feet or roughly 23.8% growth, driven mainly by project completion milestones and shrinking supply in the area. So this period marked the end of developer sales phase where early buyers who entered between 2019 and 2020 enjoyed the strongest paper gain. Part 2. Resale market phase between 2022 to 2025. After Florence obtained TOP in 2023, the market entered the resale phase. From Q3 2022 to Q4 2025, prices rose only slightly from 1779 per square feet to 1815 per square feet, a modest 2% increase. This plateau is typical of new launches post-TOP. Most of the appreciation happens before completion, and once the project stabilizes, prices track the resale benchmark of surrounding condos. We can also observe a similar pattern among our nearby projects like Affinity at Serangoon and Garden Residences. With these charts we have seen earlier, it brings us to one of the most important points, how prices are actually determined between the developer sales phase and the resale market phase. During the developer sales phase, prices are fully determined by the developer. They set and adjust price points according to their various launch strategy and gradually increasing prices as the project gains traction. At this stage, there's no bank valuation limit and prices move purely based on developer control and buyer demand. But once the project achieves TOP or enters the resale market, things change. Prices now have to align with bank indicative valuations, meaning buyers can only borrow based on what banks assess as fair market value. At the same time, resale prices are also influenced by overall market sentiment, interest rates, and supply in nearby projects. So as a result, after TOP, we often see prices stabilize or grow at a slower pace because the market is no longer driven by developer pricing, it's governed by valuation, demand and sentiment. With this understanding, it's important as buyers to manage your expectations on potential capital appreciation. Always take time to study within the development itself and across different unit types if your goal is to maximize returns and minimize risks. If you are planning to make a move in today's market and want to deep dive into some of these data before deciding, reach out to me. I'll be more than happy to share with you. So over the full cycle, from launch to 2025, the Florence Residences prices rose from about 1437 per square feet to 1815 per square feet, a total growth of around 26%. Did you notice that slight dip in prices right after 2022? Let's take a closer look at what actually caused it to happen. These are the units that sold during the dip, and most people assume that those who bought earlier and sold at this stage would have made a loss. Let's take a closer look at the 3 units that changed hands at the lowest price during this dip. Now, these are the 3 units that were transacted at the lowest per square feet during the dip in the resale market. At first glance, you might assume that these buyers took a loss, but when we look at the numbers, it's actually quite the opposite. All 3 of them entered the market early during the developer phase with very low entry prices between 1281 per square feet to 1398 per square feet. Even though they sold during the dip at prices ranging from 1577 to 1633 per square feet, each still walk away profitable, earning between 171,000 to 334,000. Now, the reason for selling lower we'll never know for sure. It could be timing, liquidity needs, or personal circumstances. But what this clearly shows is that those who entered early at a lower per square feet always have more flexibility and resilience when it comes to exiting the market, even when conditions are soft. And that wraps up the Florence Residences case study. The point of this video isn't just about one project, it shows how timing, entry and exit strategy can make all the difference in both new launches and resale properties. So I'm sharing this with you so that you can look beyond prices and most importantly to see the patterns that drive opportunities and risks. Alright, let's end off with some tips for you. For new launches, Check the quantum transacted within the project to understand price positioning. Compare lowest, average, highest per square feet to spot value gaps. Review the regional per square feet for context against nearby projects. Progressive payment helps manage cash flow. You pay gradually as construction progresses, giving you financial flexibility. Consider layout efficiency, developer reputation, amenities, and future supply for long-term growth. And for resale, always verify the bank valuation before buying. Account for renovation, maintenance, and upgrading costs. They add up to your total investment. Review transaction history and rental demand for consistency. Compare with new launch prices nearby to find value buys and have a very clear exit strategy. Know your next buyer and timeline. That's the end of today's video. And through this video, I hope that I've helped you gain clarity on how prices actually move for both developer sales and resale market. And like what I mentioned earlier, if you like this content and hope to receive more insights like this, do help me like, share, and subscribe to this channel. And most importantly, if you're considering whether to sell or buy a property and comparing between whether to go for a new launch or a resale, feel free to join me on WhatsApp. I'm more than happy to run through your numbers and options with you. See you in the next video. Bye!